So you know that you want to invest in commercial real estate, but just can't find a deal that actually pencils. Maybe you're feeling stuck trying to calculate if a deal is profitable or feasible. Maybe you're struggling with what key metrics you should actually use to evaluate these deals. What is a good return on commercial real estate? I'm Tyler Cobble, and I'm a commercial real estate investor. I've been doing this since 2013. I've analyzed and underwritten and bought a lot of commercial real estate over the years. And today, I'm going to make sure that you understand how to properly analyze any commercial real estate deal in any market in under 5 minutes so that you can go out there and get your first deal. Many investors struggle with the numbers. You get overwhelmed by all of the different metrics that commercial real estate investors seem to talk about. We're talking about cap rates, net operating income, debt service coverage ratios. We've got multi-tenant buildings, single-tenant buildings, multi-building scenarios. And the income and expenses are often complex because you have multiple moving pieces throughout every single deal. And maybe you're having difficulty finding reliable data. That is a very common theme, and you're not alone because it is incredibly difficult to find commercial real estate comparables. Both on the rent, sale side doesn't really matter. It's just not public information. So some of the more common mistakes that I see beginners make when they start analyzing deals is that they don't take into account cap rates or net operating income or cash on cash returns. Maybe you're failing to account for operational expenses or vacancy rates. A lot of people look a little bit rosier and treat these deals as if they're one-dimensional when they really are three. This can lead to missing really great opportunities because you might just think the numbers don't work when they actually do, or it could make you a very costly mistake. So it's incredibly important that you master deal analysis. That's what really separates successful commercial real estate investors from the rest. Now, when you're analyzing a deal, first off, you need to know what is a good investment return metric for you. And that is a very individualized conversation. I get asked all the time, Tyler, what is a good return in commercial real estate? Well, for you, it could be an 8% cash on cash return. It could be that you're doubling your money every 5 years. It's a metric that you really have to decide on for yourself as to what's worth it for you. What's gonna make it worth getting out of bed every day and working on this? Now, my personal metrics, I like to double my money and my investor's capital every 5 years. That seems to be a good number that works for us, and we're able to do it. Now, I go way more into these terms in other videos when it comes to analyzing commercial real estate, but let's cover net operating income. That is the actual net cash flow that you're receiving from a property after you've collected rent, paid all of expenses, but before you've paid your mortgage. Cap rates measure a commercial real estate's value based on the amount of cash on cash return you would get if you paid all cash for that deal. You'll also want to pay attention to the debt service coverage ratio, which shows you how much money you're bringing in per dollar in mortgage expenses. And of course, your cash on cash. And if you're here, you probably understand how the cash on cash works, but it's how many dollars you're getting back for every dollar you invested. Now, it's important when you're analyzing commercial deals to have the right tools. First, download my deal analysis toolkit. It's in the description below and it's free. It includes my commercial underwriting spreadsheet, just plug in the numbers and go, checklists for my due diligence, value add, and closing costs, as well as a commercial rent roll template. It's important to have all of the data to actually plug into those spreadsheets when you're getting into these deals. So you'll want to look into comparable sales in the area and break that down on a price per square foot basis. You'll also want to know what the rental rates are and the type of lease structure that is being used. You can gather a lot of this data from online resources like LoopNet, Crexi, CoStar, etc. And they may not have actual closed deals, but you'll be able to get a pretty good idea of what people are asking in the area. A couple of other important metrics that you should always take a look at are your vacancy rates and your demand. For example, if we look at flex space available in Nashville, there's almost nothing on the map. But if I go to office space in San Francisco, you can see how overwhelming the amount of spaces are in the market. The fewer spaces that are available, the higher the demand is, and the more likely that you're going to be able to get a space actually leased out. You'll then plug all of that data into the spreadsheet and voila, it's going to help you come up with your returns. That's the amazing thing about having these actual underwriting spreadsheets and these tools in your tool belt, because you don't have to be the expert on making all of this happen. It will help calculate that math for you. Okay, so here is how I actually analyze a deal in any market in under 5 minutes. You gotta find the deal first. You can use Crexi, LoopNet, email blasts from brokers, doesn't really matter where you find this deal. If you wanna learn more about how to actually find deals, check out this video here. Then you'll break down the purchase price and any renovations into a price per square foot. So if you're looking to buy a 10,000 square foot building and your all-in costs, including the purchase price and renovations, is $1 million, that's $100 per square foot. I personally like to use a 12% cap rate when I'm analyzing my deals, which essentially means that I would get a 12% cash-on-cash return if I paid all cash for the deal. That means that I need to be able to rent this space out for $12 per square foot on a triple net lease basis. By the way, if you don't know what a triple net lease is, I've got a bunch of videos on it, but high level, it's a commercial real estate lease structure where the tenants pay all of the expenses of the property, such as the common area maintenance, the property taxes, and the building insurance. From there, I survey the market to see what other properties are listed for lease at. If they're listed at $12 a square foot or higher, then I've probably got a deal. If the rental rates are lower than that, then it may just not make sense to buy that property. Now, this method is not 100% bulletproof, and it doesn't mean that you found a for sure deal, but it does mean that the property might be worth digging into a little bit further. Practice makes perfect when it comes to analyzing commercial real estate deals. It's just like getting in the gym. The more you work out, the more repetitions you get, the better you get at it over time. You're not gonna start off as an expert, but if you go and underwrite one deal a day for the next 30 days, doesn't matter if it's a deal that you think that you'll buy or not, just get the repetitions in. I guarantee you by the end of that 30 days, you will understand how to quickly look at commercial real estate investments. Of course, surrounding yourself with a group of like-minded individuals that are all going after commercial real estate deals and working together to do this as well is a great idea because you are the sum of the 5 people that you surround yourself with the most. If you're interested in checking out my commercial real estate investment mastermind, the CRE Accelerator, that link is in the description below. Feel free to book a call with me. It will be me. I'll answer the phone. Don't forget to download my free deal analysis toolkit. The link is in the description below. It will help you get off on the right foot. And now that you have a better understanding of how to make the numbers work on a commercial deal, check out this video here where I analyze an actual deal with the investors that bought it so that you can better understand how the process works.